Welcome back to Invest Global. This is Joe Vaclavik of Standard Grain. He is an expert in the grain markets, and currently with supply chain issues we're seeing around the world, these things are very concerning. He just did a video this morning actually talking about national gas prices in the US maybe hitting that average of $5. So Joe, could you explain a little bit more on that and how the corn grain markets relate to the gas markets?
There is an intimate tie between the corn market and the fuel market. Ethanol accounts for the largest portion of our demand base for corn that's grown here in the United States. In any given year, really dating back, the last 10 or 15 years now, 35 to 40% of the corn that we grow in the United States is ultimately turned into ethanol. And there is an ethanol byproduct, of course, called DDGs that they use for animal feed. But I mean, most of it is turned into ethanol and put into the gas tank. So there is a relationship there. Gasoline prices in this country are, off the charts, as we know, approaching a $5 national average. And the crazy thing about it is that demand hasn't been reduced at all. We saw gasoline demand up 2.5% last week. It was up 2% the week prior. This was the best. What was EIA reported just yesterday was the best week of gasoline demand so far this calendar year, which is amazing. So I think gasoline prices in a vacuum, they probably need to get to a level that discourages demand. How does that tie into corn? I don't know if there's a huge tie yet. My fear would be this in regard to corn, and this could be a bearish factor of the corn market at some point. If Americans start to drive drastically less, if your demand for gasoline becomes reduced in a dramatic or material fashion, which I think is a place that we have to go to. I think that's a place we have to go to. Your demand for corn via the ethanol industry could be reduced if that decline in gasoline demand went long enough. We've already got real high ethanol stocks. Inventories of ethanol in this country are the highest they've ever been seasonally, like for this calendar date. So there's some risk there. It's not anything that matters yet, but if you see a material decline in gasoline demand that lasts for an extended period of time, the corn market could have some issues, I think.
It's interesting how this also relates to countries around the world, right? So I think Ukraine, the whole issue on the Black Sea as far as distribution there goes, plays a large role in this. And also I've been covering what's gone on in Sri Lanka, where we've seen some of these countries, in the US, we have kind of this nice abundant supply of gasoline, but in other countries where it's completely cut off, and they're in that situation where, like you talked about, that demand shock that might hit the US. Is happening in these countries already, and especially places around the world that are heavily reliant on wheat, that are major importers and not exporters, right? So places that I study lots in Africa, like Egypt, for example, is in a very tricky situation with this. And if you just look at the supply chains around the world, how this is going to affect each country at a different time is quite interesting. But I think in the US, it's happening in real time, right? It's because this planting season, how prices kind of change leading up to the actual crop yields, right? So in my opinion, this is very interesting. And you've been covering this for some time now, but this heat wave thing that's going to hit the Midwest. I'm originally from Iowa, but could you explain a little bit more about that?
So if this were a normal year, which it is not because of Russia, Ukraine, and inflation, these are things that we don't normally see. These are things that I've never seen in my professional career. I mean, I've never seen inflation or hyperinflation or whatever you want to call this. I've never seen a war in the breadbasket of Europe. I mean, things like that. This is all unprecedented stuff for most of us. If this were a normal year and you didn't have those things, weather would be your biggest price driver when it comes to spring crops or summer crops this year, like corn, soybeans, spring wheat. How good are the yields going to be? What's the acreage going to be? Those are all still big unknowns at this point. We do have a heat wave coming into the U.S. Cornbelt. It's going to begin next week, and it's going to stick around for about a week, the way that it looks. And then beyond that, the forecast gets kind of blurry, and you can't really predict weather beyond, say, 7 or 10 days out. But if you get into if this were a normal year, you get hot and dry late June into early July, that's bullish the market. That typically results in some sort of what I would refer to as a crop scare rally, where the market rallies, at least for a moment in time, on the idea or the thought or the fear that the crop just might not be good. It might fail. It might be below trend. It might just not live up to expectations. And a lot of times, actually in the majority of instances, when you see a crop scare event, it ends up being like an imagined event. The market just believes for a week or two that we're going to have issues, and then we end up being fine most years. So in a lot of years, you'll end up posting your highs either for that time of year or even for the entire calendar year in June or July. It doesn't happen every year, but in a lot of years that does happen.
And when you're looking at this market, what are kind of some of the main metrics you talk about? So he has a YouTube channel, and we'll have that link down below. It's Grain Markets and Other Stuff, correct?
Mm-hmm.
Okay, perfect. So he kind of goes through a lot of things that I think are interesting, but for people watching this that are trying to keep their fingers on the pulse of this market, what are some things, some metrics maybe they could look at to understand this a little bit better from a bird's eye view? Maybe if they're checking in, let's say 10, 15 minutes a day, just some key metrics to look at. Obviously your YouTube channel is one, but maybe some other things.
Weather is year in and year out about the biggest driver of agricultural commodity prices. Maybe with the exception of a year like this, because the market environment, the structure, the prices, everything changed drastically when Russia invaded Ukraine there at the end of February. I mean, you saw this huge spike in wheat prices, big spike in corn prices. And we've reverted back lower to some extent, but we're still well above what I would call, pre-invasion levels in the wheat market in particular. So I think that this geopolitical thing is the first thing to watch. The big issue with Ukraine specifically, it's not a production issue right now. It's a logistics issue. It's that you've got millions and millions of metric tons of corn stuck in the country. They're going to harvest their winter wheat crop here this summer, and then they're going to harvest another corn crop in the fall. All that stuff's going to be stuck in Ukraine. If they could somehow get this logistics issue figured out, and everybody could play nice, and Russia could say, okay, export grain out of the Black Sea, that would be bearish the market, because it would put a ton of supply back into the world market. And these, third world countries who are not independent when it comes to food security, they depend on the Black Sea. If they could get that wheat, they could get corn. This would be a totally different deal. But for the moment, it's grain is stuck in Ukraine. USDA is projecting record-ending stocks of wheat and corn in Ukraine, meaning that they're just going to be sitting on a whole bunch of it that they can't get rid of. So for the moment, it's more of a logistics issue than a production issue. The war's going to affect production too, no doubt about it. But for the moment, logistics trumps production, I think, in regard to the Black Sea.
But I found it interesting. I was watching this video on yours talking about the soybean acreage battle versus corn.
Yeah.
And you were talking about this, and I think just last year, right? And how have you kind of seen this change throughout? What has it been? Almost 6 months to a year since you made that video. But I found that very interesting. You kind of breaking that down and why those things are very important. Most people probably don't understand the logistics of if we see way higher supply in, let's say, soybeans versus corn, how that affects the market. Obviously, you talked about how ethanol plays in with corn, but could you elaborate on that just a little bit?
Well, corn and soybeans are your two big cash crops in the Midwest or in the Corn Belt here in the United States. They compete for acreage every year. This year, the general idea is that corn acreage is going to be reduced versus last year and versus normal because of high fertilizer prices, which is something that also has at least something to do with Russia and Ukraine. Although fertilizer prices were very high long before the invasion occurred, it had to do with supply chain and logistics and all sorts of messy stuff that we've seen affect every industry on the planet. But the cost to grow corn in the United States went up 20% year over year from 2021 to 2022. That's the estimate that I've seen, and I believe that to be pretty accurate. The cost to grow soybeans did not go up as much. Soybeans are they're a crop that is less fertilizer intensive. So the general idea here is that this year, when farmers were making planting decisions, which was back in they start to make decisions the prior fall, but that survey that USDA does is in early March. And during that time frame, farmers said, we're going to plant less corn, more soybeans this year. And that's kind of the general theme, is that because of this drastic shot higher in inputs in regard to corn specifically, this year is kind of odd in that the corn prices were excellent, and actually in any other year would have been really good compared to soybeans, and corn would have bought more acres. This year they didn't, because of those high inputs and fertilizer in particular.
Interesting. Okay.
And it's something we watch every year. I mean, there's an acreage battle every year. Some years it's in a bull market like this, where kind of both crops need more acres. In other years, it's more of like a war of attrition, where like neither crop needs the acres because we're so well supplied. So it's different every year, but there's always either some sort of competition for acres. Like the market tries to push acres one way or the other based on needs, basically.
Definitely. That's very interesting. And, when I'm looking at this whole situation playing out, it's obviously, on my channel, I look at different investments you can make based on
Yeah.
the narrative in the markets, but this is definitely a challenging one, right? People definitely, I do not recommend you play around with futures in the commodities markets. That is something you need to be very, very advanced to do. But, when it comes to ETFs in this market, it's a little bit challenging because I think a lot of people don't understand the kind of in-depth when it comes to, especially like with agricultural ETFs in this space, because a lot of it is just kind of this basket of almost futures, right? So it's not necessarily the producers of the crops. Personally, when I'm looking at something like this, I always like to talk about, self-sustainable agriculture yourself, but those who are looking to play the markets in the US, you're involved in this space. What do you see most people kind of interested in it this time? Is it ETFs? Is it playing the futures markets? What are you seeing?
So I'm not an investment advisor or anything like that. And the people that I work with on a day-to-day basis are generally either producers or users of the physical commodities. I've actually never touched a commodity ETF in my life, even though I've been in the commodity business for 17, 18 years. But in any case, uh, the general gist of like the bigger investment environment in 2022 is that it's like impossible to make money anywhere. I mean, so the stock market's down sharply. Bonds are down almost double digits to start off the year. Even real estate's backed off just a little bit. So there's been like no safe place to hide. I mean, if you had a traditional, like a 60-40 portfolio and you're an investor, or even if you're a hedge fund and you're long equities and you're long bonds, I mean, everything's just gone south. I mean, it's been impossible to generate a positive return, except for in the commodity markets where you've seen a big positive return. There's a lot of different indexes that track commodities. I think the Bloomberg Commodity Index is up like 35-40% year to date, which is a phenomenal return. It's just that commodities are a sector that is difficult to access for like an individual investor. If you're a big fund and you've got billions of dollars, yeah, you can trade futures and you can invest that way. But for the average investor in the United States or anywhere, yeah, you can play with ETFs, but they have a lot of inherent flaws. The ETF owns futures on your behalf, essentially, when you buy an ETF. And they've got to do a lot of messy stuff. They've got to roll into carry markets, which results in slippage, generally, if you want to put it that way. They don't generate positive returns, generally speaking, over any extended period of time. It's typically something that has been like a good short-term hold sometimes, but look at pull up a commodity ETF and look at a chart and look at it back to 2008. You saw a spike in 2008. They did nothing but go lower after that. And then you've seen a resurgence here. So it's something that, like, generally speaking, and this is not a prediction about what's going to happen, but generally they're like a short-term play and something that you probably would not want to invest in long-term. Like commodities historically have been a terrible investment, whereas, traditionally equities or real estate or something like that has been a much better investment.
Definitely. And that's something that I would definitely agree with on, this is more something that's important to understand the narrative of and
Yeah.
see how then, what are the second order consequences of it, right? So how does it affect other markets, and then kind of place your positions as far as that goes. But yes, playing directly in the market, unless you're an expert like yourself, and you're in the market, you're talking to producers every day. It's just too hard of a situation to go off on. So thank you very much for coming on the channel.
Yeah.
And just to wrap up here, maybe touch on the newsletter you have, because a lot of people are interested, if you want to get a little bit more in-depth research on a day-to-day basis, you provide a newsletter. Is that correct?
Yeah, I found myself the last several years really doing a lot of content creation. So I've got a YouTube channel, I've got a podcast, and I also have a paid service. And most of my customers are involved in agriculture. They're farmers, they're cattle feeders, they're people in the commercial grain business. But in the newsletter, I write it, I send it out every morning. I mean, I talk about all the stuff we just talked about. I mean, keep tabs on the geopolitical thing every single day. Keep tabs on the latest weather forecast, ethanol production, USDA reports. I mean, all of those things, crop progress. I mean, every little fundamental detail, it gets pretty specific, but I do that every day, and it's for people who are involved specifically in these markets on the physical side, generally speaking, is who I cater to. But if you're somebody who's maybe outside of that business, the podcast and the YouTube channel would be great for you. I don't think I would talk over your head necessarily. There might be some stuff that you don't understand, but I would say pretty accessible to the general public.
Yeah, he does a great job of kind of breaking everything down. I really like the kind of daily recaps too, where you're analyzing the market and really breaking things down in that way. So thanks again for coming on the channel. Definitely subscribe to his channel, and have a good one, guys.